Good evening. Well, Yahoo appears to be at a crossroads. The company may spin off its core business as it faces intense competition and pressure to boost shareholder value. It's also reportedly weighing whether it should continue with its plan to sell its most valuable asset, its stake in Alibaba. I explored what all of this means for the future of one of the biggest names in tech.
Yahoo's board recently ended a three-day meeting that reportedly included discussions to sell its portfolio of online businesses. That core business is estimated to be worth around $3 billion. That's less than 10% of its overall value. Most of Yahoo's real worth is in its Alibaba stake, which it planned to sell in January. The discussions come at a time when Yahoo has been struggling to compete against Facebook and Google in attracting online ad dollars.
There are other companies that have a clear, defined niche, and Yahoo is still seeking theirs out. They're stuck being a generalist.
The pressure to sell its core business is driven in large part by activist hedge fund Starboard Value that owns a substantial stake in Yahoo. In a reversal of opinion, it now wants the company to hold on to its Alibaba stake and scrap the rest. Starboard's new position comes after the Internal Revenue Service failed to reassure shareholders there wouldn't be a big tax bill if the Alibaba stake were spun off.
The tax clarity issue is a big issue because all the IRS said is, we are not going to tell you that it's okay. It may be okay. It may not be okay.
At this point, it is unclear what Yahoo is going to do. But even if it does sell its core business, experts say the name Yahoo will likely survive.
The company does have brand equity. The company's been around for a while, and most importantly, which people are not talking about, is that there's talent in the company still. So even if somebody goes ahead and purchases the company for the talent and close down a lot of the units that are not profitable, there's value there.
CEO Marissa Mayer has made it clear she does not want to sell off the core business and would prefer to spin off Alibaba. But with the mounting pressure, the board may decide against her. With all these question marks, Mayer isn't getting high marks for her more than three-year tenure.
She certainly inherited a big chunk of the problems, but at the same time, as CEO, her expectations are to be able to turn around the company.
Now, despite the weaknesses at Yahoo, Marissa Mayer's compensation has continued to rise. In 2014, it was around $42 million. That is a 69% bump from the previous years. And if she were to get fired by the board, she'd get another $25 million in severance based on Yahoo's current share price.